Hello and welcome to today's live webinar where we look at recent ASX investment opportunities in review. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Up on screen there is the performance of the ASX 50 model up to 30 June. So following the algorithm signals, is showing a return of around 12.5%. We'll have this data updated for the end of the September quarter, and we'll have that presented in next week's Opportunities in Review webinar. The technology that I'm using today is our Investor Signals algorithm and charts membership. If you'd like to have access to it, you can set up a free trial by visiting our website, and we're offering a special where it's $1,320 to subscribe for 1 year, giving you access to everything that we cover in today's presentation. Moving straight into a graph of the US market, the biggest shift in markets obviously is interest rates moving higher in the US, and we've seen yield sensitive names retrace. We've also seen some of the momentum names that are trading on high PEs correct as well. So part of today's recording is we'll go through the top 100 stocks, and I've created a list of opportunities that we want to be focusing on. Up on screen there, the graph of the Dow, in the context of how long the rally's been in place this year. The correction we've had over the last few days is not substantial, but I think it would appear that there's enough headwinds there where the market's probably likely to mainly move sideways, which makes for a slightly more difficult environment to identify the trading opportunities. But I think in saying that, there's certainly a handful of stocks that we're watching closely that we want to draw your attention to in today's recording. The XJO, so we've got support here at roughly 6,100 in the index. If we see the XJO come down and take out that 6,100, next level's probably back here at around 59.60, 59.50. We're at the beginning of third quarter earnings in the US, so we start to see the September earnings results come through, and that the general consensus is that US earnings, putting aside tax cuts, should grow on a forward basis at about 7 to 8%. I think there's an acknowledgement there's maybe been a slight slowdown in the global economy. The US economies remain strong, so we may start to see the early signs of slightly softer earnings and the impact of a higher US dollar come through on this September quarter results. So there'll be a bit for the market to digest and sort of reassess where valuations are. But for the most part, US equities are trading about 16, 17 times earnings, so not a particularly excessive PE ratio. So what we want to do today is we're going to come into the watch list here. We're going to select the ASX 100 from the drop-down list. We're going to get the gainers to the top there, so A2 Milk. I'm going to click on that code, and we're just going to move through these fairly quickly, and then at the end I'll bring into screen my summary notes and give you an opportunity just to write down the high conviction ideas that you want to be focusing your efforts on. So A2 Milk support line here at around $9. It was one that we covered in the prior ASX Opportunities webinar. But the stock hasn't done too much, still sitting on support there at around sort of 980. Evolution, still of the view that I think gold's an opportunity. So Evolution and Newcrest we like. So Evolution support here at around 270. I think that's one that you want to keep on your watch list. Now, after these yield sensitive names, in particular the real estate investment trust sector correcting, we're just starting to see a little bit of buying interest come into those today. And interestingly, we had algorithm buy signals across a number of the REITs at the end of last week, so that'll be something that we look at today. But Goodman Group's not sort of our preferred play there. You're seeing a little bit of a recovery in Caltex, but it is under algorithm sell signals, so we're looking for that to roll over and make a lower low. Now, Flight Centre's been a recent algorithm buy signal. We commented on the blog on Saturday and then again today. So the stock's corrected from $70 down to $50. You can see there that sort of deep support or deep values down at around $43. There's a slight price gap just there down to $49.90, and that's been filled, and we're starting to see some buying interest. So we just shuffle that support line up to there, Watch the short-term momentum indicators. As long as they continue to point higher, then we're probably looking at the support being in place here in Flight Centre at $50. So that's one for you to make a note of. Aurora, so this was the original spin-off of Amcor. This has predominantly started off as Australian, New Zealand manufacturing, but they've made acquisitions and expanded globally again. So Aurora at around 325, I think that's probably a good support level there in Aurora, so that might be one that you make a note of. Newcrest, so keep in context, more than 2 years it's traded sideways, so it's hard to pick the time frame of this moving higher, but with gold down where it is at the moment, we think Newcrest represents reasonable value supported by a backdrop where gold should do a little bit better than it has done over the last 6 months. Stockland's a little bit cautious there across these property names, so we'll skip past that. Now, car sales, we've had an algorithm buy signal on this, and I think car sales, Seek, Aristocrat, so anything there with a slight technology flavour that I think momentum's likely to continue to support these names. So I think car comes onto your watch list and just recognising that there's support there at $14, maybe a stop loss below that. Spark Infrastructure not doing there at the moment. Dulux not doing there. So some of these will skip by. James Hardie, so this is sold off principally because US interest rates have gone higher and concerns that that'll have an impact on a slowdown in the US housing market. But the stock's already corrected 20% from $24 down to $20. I tend to think that it's now in a value range down here, and this is a name that you might want to keep on your watch list there and bring that into there. So it may be that this reversal that we're seeing today is the low, and again, if we come back down to the short-term indicator, it's in the early stages of turning higher. I suspect that James Hardie's good value down here, and we start to see it do a bit better. So keep that one on your watch list, make a note of that. Harvey Norman, concerns there long-term for Harvey Norman. Ramsay Healthcare, look, oversold, 3% earning, 3% dividend yield there. Semigroup. So here's one of the examples of the REITs where we've had a recent buy signal. So it's hard to get excited about earnings growth for Semigroup, probably only maybe 3-4% earnings growth, but on a 5.5% yield, if we see any backup in US interest rates, then you could see a bounce in these yield-sensitive names. So that's something we're just watching closely at the moment, and I've added those to the notes for the end of today's session. AGL, so this is a stock that's in the model portfolio. We feel it's oversold, but buying that and selling covered calls seems like a low-risk way to bring cash flow into portfolios. So here's an example of where we're seeing an algorithm buy signal on the REIT. So we've identified Semigroup. Now just drawing your attention to Dexus here. GPT under sell conditions here, so not doing it there at present. Adelaide Brighton, this was an algorithm buy signal a few months back, and it's lingered around the support there, but just not one on our high conviction list, but just drawing your attention to that algo signal. Still concerned about long-term valuation here with Computershare, but that's not something for today. ResMed, not doing it there at the moment. CSR, I think probably starting to look oversold, CSR, but we've discussed sort of the concerns around domestic housing exposure stocks, so Boral and CSR. CSL, so it's been a while since we've seen an algorithm buy signal. Last time in CSL it was at a 126, the stock rallied to 230. We've seen a retracement back to around $200. Not really on our high conviction list, but we're certainly watching it because it's been a while since we've had a buy signal there. Woolworths, as attractive as the turnaround story is in Woolworths, with the stock trading 24 times earnings, I'd warned in the last set of recordings that the stock was overvalued and we were looking for a retracement back to around $27.50. Well, that's happened now. So I think we're back in an area where it's a safer level to think about owning Woolworths, but still think the earnings growth is only moderate and the PE is still high from historical averages. So owning it and selling a covered call and producing cash flow makes sense there. Domino's, so we think this is one on the short side that you want to keep on your list. We think that this stock's expensive. And you can see their resistance at around 57, another lower high here at around 53, and the stock's continuing to push lower. Transurban, so this is an example of where we've seen these yield-sensitive names under pressure. Transurban's obviously done a discounted rights issue recently, which has also put downward pressure on the share price. The stock's now trading on around about, I think, 4.5% yield, looking for about 10% growth in that dividend on an annual basis, which should still be achievable. But with US interest rates going higher, you've seen these yield-sensitive names move lower. Interestingly, that Transurban does not have a buy signal, whereas some of the other names that I've mentioned do, and again, we'll sort of revisit that at the end of the recording. Seek, so this sits in that group where we look at Seek, Car and Aristocrat, recognising that they're all under algorithm buy signals. Seek disappointed the market with not delivering the underlying earnings growth that the market expected in their latest results. However, management did confirm that they expect in 2019-2020 to deliver 20% earnings growth. So we're just watching to see whether support develops here at around this $20 level. We've started buying into this name, haven't yet sold calls over it, but we'll sort of continue to sort of monitor whether we sell calls or look for a little bit more capital growth before doing that. Mirvac, now this is not a name we particularly like within the property space. So our preference is to look at some of the other property developers. Like maybe we see Lendlease as a better quality business, and then if we're looking for something in the sort of real estate investment trust, we think sort of there's value in maybe Unibail Redempco, which is the old Westfield business. We think there's value in Semigroup. So there's other REITs that we're attracted to, but just highlighting that we had an algorithm buy signal there. Tabcorp, so keep an eye on this. I think again as we come into the back half of this year, there will be another buying opportunity. This was one of the high conviction ideas coming into the recent earnings results. The stock performed very well. For the most part, we've taken profit, but on any retracement back down to sort of 460 thereabouts, we would see that as a buying opportunity in Tabcorp. So keep that one on your watch list. Horizon, it's probably no catalyst in the short term to really drive this stock higher, but we think value is starting to emerge here. We're mindful that it's gone from sell conditions into buy conditions, but we don't really have what I'd describe as a bullish price structure as yet. We really need to see the share price sort of move into a higher low pattern off this sort of $4 support level. But certainly one for you to start thinking about more, given that we think sort of value is starting to emerge there at $4 a share. APA not doing there at present. Amcor, so they've made a takeover bid for the competitor on the New York Stock Exchange. It's not unusual for hedge funds to short the company that is acquiring the new business and go long the company being acquired, and I think that's playing out in the market. Slightly higher commodity or input costs have probably weighed on Amcor a little bit, but I think as we start to push through the back half of this year into the early part of next year, and the takeover deal is finalised, I'd expect to see a bit of a relief rally in Amcor. So in a soft market, we could see it down closer to $13, at which time I'd say that is very good buying. So keep that one on your watch list as well. Sonic Healthcare, this was one in the recording, the last webinar series, a little like Woolworths, where we had notes in place there where we're looking for a retracement in Sonic. We haven't had the algo, so it hasn't gone from sell conditions into buy conditions as yet. So we'll keep an eye out for the upcoming algo signal, but I'd expect sort of somewhere between say $24 and really where it is at the moment to prove to be a good support level for Sonic. Crown, again at around $13, we think that's good value, and you can just make a note to that effect. QBE, so some of the notes that I'll display at the end of today's presentation are just drawing your attention to stocks that have created new highs, and on the next retracement where we get a higher low and an algorithm buy signal, maybe, so and this may be a number of months away from that occurring, but just drawing your attention to the fact that QBE's broken out of that sort of lower high pattern there, and I think sort of the general supportive fundamentals of higher interest rates should play into a better earnings picture for QBE. A similar situation here with Incitec. It's under sell conditions, but the stock's broken out into higher highs, and the next algorithm buy signal, which may not occur until sort of November, December, January, we'll be sort of having a closer look at that. Unibail Rodamco, I think this is at a discounted level. We're probably 5 months away from seeing a further earnings update, but I think the next earnings result, you should start to see the benefit of the synergy cost savings post the Westfield acquisition start to show up in the Unibail earnings. So this sell-off at the moment as a result of interest rates spiking in the US is probably an opportunity to keep this name on your watch list and look at accumulating it. Wesfarmers, we'd expect to see the Coles spin-off finalised maybe at the end of November, early December. Our strategy really here is to leave this one alone, wait for the separation of the businesses to occur, then maybe look at buying both names and selling tight covered calls over them. Not sure that there's really a whole lot more upside from the current sort of 4.5% yield that the names are trading on. Vicinity, just highlighting that there's a buy signal there. Insurance Australia Group, I think this one again is worth keeping on the watch list. If we were to see sort of weakness in the broader market and sub $7 on Insurance Australia Group, I think that could provide a good buying opportunity. Origin, just pointing out that it's under algorithm sell here at the moment, so we're just a little bit cautious of how that unfolds from these levels. Medibank, support here at 280. Don't see a catalyst for the stock price to really rally, so owning it on the support and selling a covered call, it's really a cash flow strategy for portfolios. Now this ASX, it's been a while since we've seen a correction here, and again in the last opportunities in review I spoke about what a terrific business this is, but trading up at around 27 times earnings from memory. A correction in the PE was long overdue. I think if you can look at this name sub $60, which we're pretty much there at the moment, we're trading around 60.50. So if we see that $59 something this week, I would suspect that finds support and you get a rally up. The conditions are probably not in place for it to create a new high, but certainly from an oversold level here, you could get a low risk bounce higher in ASX. So add that one to your watch list. Cube, a bit cautious of this name. So 290 there as resistance. JB Hi-Fi not there at present. A general thesis or a strategy that was highlighted in the last recording was being long JB Hi-Fi and short Harvey Norman, and that's really played out. The JB Hi-Fi result was certainly better received than Harvey Norman's. Now, Downer EDI, this was one of the high conviction stocks that we had coming into earnings, and the stock performed very well. Given that we can't, there's not the opportunity to do call options over this name, we think that the stock's just reflects full value at the moment. So unless we see further earnings upgrades, we think the stock moves sideways. So we've taken profit here in Downer, and we're just simply waiting for a pullback. If we saw it back below 750, happy to take another look at Downer. Sydney Airports, yield sensitive names, under pressure at the moment. So keep an eye on this, maybe between 650 and 670 there ends up being a good entry point. Link, so this is one that I like the long-term fundamentals here. We're just mindful that it's under algorithm sell conditions, and we're looking for further sell-off, maybe back down to sort of low $7 before we take a look at that. I warned on the bank stocks that we had algorithm sell signals in place across most of, or if not all of the banks during the last Opportunities in Review webinar series, and we've seen CBA correct from $75 back down to $69, and similar in percentage terms corrections for all the banks. Suncorp, we've had an algorithm buy signal here at $14. Again, not sure what the catalyst is for it to really rally too much higher, but owning it here and selling covered calls makes sense. Bank of Queensland, so again, we're seeing sort of this lower low, lower high pattern, resistance here at around 11.70, and the stock sold off about $1 since then. Westpac, so we've had an algorithm buy signal here on Westpac, but I wouldn't say that the structure is particularly bullish yet. So I'd like to see the stock price sort of find support here at around this $27 level before getting really excited about the upside opportunity there in Westpac. But it is worth noting that it's the first of the banks that have been added back into the model portfolio. Oil Search, Oil Search Santos from algorithm buy signals we had earlier this year have done very well, but not a current opportunity there. Lendlease, so keep an eye on this. This is corrected from almost $22 down to $18.50. It's under algorithm buy conditions at the moment. The short-term indicators turn negative again, but just keep an eye on that as we start to see that turn back up. May create a good buying opportunity there at around $18. Again, we're not forming a view that the conditions are in place for Lendlease to take out this high, but a little like when we looked at the graph of the ASX, Lendlease is a quality business. If it gets oversold, we'd expect to see a little bit of a recovery rally, and we'd consider that a little bit of a relatively low risk opportunity for the market. There we are, back to the index. So Brambles, so this is one of those names where it's a little like QBE. It's broken out, created the higher high. We don't yet have the higher low conditions in place. If we saw Brambles later this year retrace back, fill the price gap down to about $10 down here, and we had an algorithm buy signal, we'd consider that a good entry opportunity. So just think about that when you're toggling through the graphs, and we'll keep an eye on Brambles at around $10 as an entry opportunity there. Cleanaway, we've had an algorithm buy signal. It's been added into the ASX 100 model portfolio. I just highlight that a number of analysts are bullish on this stock, and it sits in model portfolios for a number of the institutions. So on any sell-off that we get here, it might be worth just keeping an eye on this. Maybe we'll get down and test that 167, 170 level, but that'd, I suspect, end up being a good buying opportunity. Challenger, so lower lows, lower highs. So it's interesting to see in the cascading sort of lower highs there. As is the case with NAB, we've seen it roll over, make lower lows, lower highs. So the algo signals flagging that, and the stock continues to look like it's under pressure. Telstra, a bit of a concern that we're under algorithm sell conditions here again at around 320. You can see there that I've put the resistance line in place with a high at around 340, and we're just watching to see, whether these shorter term momentum indicators roll over there and Telstra softens a little bit. Macquarie Bank, it's actually not under buy conditions, Macquarie, so we're a little bit cautious here and looking for a sort of a deeper correction and an algorithm buy signal before we do anything there on Macquarie. Now, Semigroup, this was another one of the high conviction ideas from the last round of opportunities in review. Semic rallied around 20% following our positioning of being long the stock ahead of the earnings result. A little like Downer EDI, we think a lot of the good news is priced in. Semic's probably got more upside than Downer does. And the next surprise is going to be the next trading update or earnings result in February. So we'll expect Semic to really just bump sideways. The earnings results should be sort of skewed to the upside with positive surprises. Any opportunity to buy it on a pullback is something that you want to add to your watch list. Woodside, one of these names that we're waiting for a correction into the back half of the year. The stock's broken out, created a higher high. If we see an algorithm buy signal back at around $32 in November, December, we'd see that as a good opportunity. So the one ones that we're just sort of keeping an eye on for opportunities 2-3 months down the track. Orica, lower lows, lower highs, so a bit cautious there. Ansell, support at $25, but again, don't think there's a catalyst short term to really drive the price higher. Coca-Cola looks a bit expensive at $10, so we think that runs into resistance. Aristocrat Leisure, so if we have a look at sort of where the price support might be here, somewhere around $24 would be a deep discount, but around $27, $28 could equally sort of be the higher low formation. So if we look back at the history of the algorithm signals here, it's always done a very good job of picking up the higher low formations. And therefore, with this recent batch of signals, we just sort of have Aristocrat, Car, and Seek now on our radar as long opportunities in the market. Santos, as with Oil Search, so we had those signals earlier this year. They've done very well, but it would appear that sort of oil and natural gas prices are pretty close to their resistance at the moment. So Bendigo and Westpac are the only two banks that have been added into the models, but for the most part, we're still pretty cautious on the banks, and for the moment, probably prefer the short side of it. TPG not doing there. Just flag that obviously this has been taken over by Vodafone, but it has broken out to create higher highs. Rio under sell conditions at the moment, so we've seen a number of the metal stocks roll over and have lower lows, lower highs. Our preference is still BHP over Rio. We've taken profit for the most part in Rio after owning it at lower levels, and the attractiveness with BHP is obviously the exposure to the energy component of the portfolio. Not that we see a lot of downside at the moment for Rio, but we're just cautious that that sell signal's in place. Star Entertainment, so this was a high conviction idea coming into the earnings result. The stock rallied roughly 15% off the back of that earnings result, ran into resistance. We've had the algorithm sell signals, so for the most part we've taken profit on Star in client accounts. As it retraces back, it's just worth zooming in and recognizing that the price has sort of filled this price gap down to around $5. So just watch this, see whether we get a little bounce from here, but still under sell conditions, which is a bit surprising because the actual earnings result was very good. A solid pickup in earnings from VIP Gaming. Whether the market's concerned around risks around the capital expenditure with the Queen Street Wharf Casino in Brisbane. But if you look back over the last, say, 8 months or so, there's been a pattern where most of these rallies have been sold, and it's been quite aggressive, really, the sell-off following a good earnings result. So a little bit cautious there, but short term, let's just see whether now that it's filled this price gap, whether we start to see these shorter term indicators turn positive and a little bit of buying come in at around that $5 level. Boral, so this is negative, lower lows, lower highs. This is one that's on our short list. Healthscope, so with the interest rates going higher, Healthscope being a low growth business with only a 3% dividend yield, that's been a little bit unloved, but I think the story here for Healthscope over the next 2 to 5 years is a positive one, and we should start to see moderate pickup in earnings growth for Healthscope. Not doing it there. Northern Star, not doing it there. Qantas, I think the concern here is obviously high oil prices. Most part of their portfolio hedging or for their fuel hedging rolls off in the short term. I think in a matter maybe within the next 6 to 12 months, most of that hedging comes off, and that's going to have a fairly large impact on the cost of business. Also, the other concern here with Qantas is the aging of their fleet, so a capital expenditure cycle that they're going to be coming into that's been higher than what it has been. So Qantas has corrected from $7 down to $5.50. Let's just keep an eye on it. If we see it back down to sort of $5.25, we might start to take a closer look at that. Treasury Wine, so at around $17.50, we think there's probably support there building. BHP, we think that's pretty much full value in line with the market running into resistance. if we just jump back and have a look at the algo signal there, so we had a recent signal in BHP right on the low there at $30, and the stock has rallied up, made a slightly higher high. So the conditions for the buy side stay in place there for BHP, which is a different sort of outcome to what we're seeing there with Rio. Whitehaven Coal did well off that signal. This one here, Clydesdale, was one that I had on the list from the last webinar series. And you may recall that the notes were that we were looking for a retracement and an opportunity to buy it sort of more around that 575 level. And we're here now. The risks with this is the Brexit coming up in March. If that's messy or more complicated than the market is allowing for at the moment, then that could have a negative impact on Clydesdale. But the positive here is they've acquired Virgin Money, which I think is a strong acquisition for Clydesdale, and we'd expect to see that start to flow through to better earnings results. So somewhere between this sort of 550 and 570, I think there might be an opportunity to buy that and then maybe look to get out of it before the end of the year. ANZ, lower lows, lower highs, so resistance there at around $30, and the stock's looking like it's wanting to go back down and test that $26 low. Fortescue's been a bit disappointing, so whilst it's under algorithm buy conditions, within that sort of structure as a secondary form of analysis, we've still got minor lower low, lower high patterns, so we're not sort of seeing the bullish turnaround there in Fortescue. Oz Minerals under sell conditions, so this is one that's in the notes that I'll review at the end. So it's interesting that you're seeing Rio, Oz, now Iluka up on screen under sell conditions, and these are the type of patterns that can later you look back on and recognize that they were great selling or shorting opportunities. So part of today's is drawing your attention to these commodity names that are under sell conditions versus those that are under buys. So BlueScope under buy conditions, South32 under buy conditions, Lumina under sell conditions, and there we are back to A2 Milk. So before we go on to the next part of the presentation, when we look at the model portfolios, I'm just going to bring into screen some of these notes, and you can maybe just go through these and make sure you've got sort of similar comments down. So Lendlease, I think, and I'll start to tighten these notes up for next week's recording where we start to lock in specific price levels. But Lendlease is on our radar as this sell-off occurs. Brambles is more of a long term, but the higher highs in place. We're now looking for the higher low in the back half of this year. Healthscope I like as a long, slow recovery opportunity in the market. Woodside, we've got the higher high in place, and in the back half of this year, if we see the higher low, you're forewarned on, I guess, being ready to take action around that, albeit a number of months away. ASX, I think we're much closer to an entry opportunity there, so sub $60, anything sort of $59, something is a good buying opportunity there. Flight Centre looks like sort of after the recent algo signals, we're starting to see some buying support come in today. IPL, the higher highs in place, but we'll look at that on a retracement in the back half of this year. CSL, we're watching that one at the moment. So Seek and Aristocrat, these are faster growth names with a technology exposure, and we're just seeing recent algorithm signals on those three names. So just drawing your attention to that. In a way, so I spoke about analysts liking that, so I think that has some industry support on a retracement. So again, we'll tighten up the pricing on that, but around 170, that looked good value. AGL's oversold, probably not a catalyst to cause it to rally too much in a higher interest rate environment, so you want to sell calls over it. QBE, so this is one where we're looking at that, so the higher highs in place, we're waiting for a retracement and the algo buy signal into the back half of the year. So one of the themes in today's commentary is the yield sensitive names. So with interest rates going higher, we're starting to see some of these yield sensitive names display algo buy signals. So Semigroup, Vicinity, Mirvac, Sydney. Transurban does not have a buy signal, but we spoke about what's going on there with the rights issue that's maybe weighed on that. High conviction ideas, and we'll start to sort of build this out as we get some of these entry levels, and I'll shift these names from the general section into the high conviction, and then we'll update on the blog in real time each day as we start to build positions in some of these names that I've identified. But right at the moment, the names that are in there, Unibail, I think that is oversold, but we'll be waiting 4 or 5 months for the next half-year earnings results as a driver for that. I think Newcrest and Evolution should continue to think about having exposure to those names. And what we'll also start to do is build our short signals. So for the moment, we've added in Bank of Queensland, Oz, Iluka, Boral. I'll add Rio in there as well. And again, we'll start to sort of identify the stop-loss levels in these names. So hopefully you've been able to get those notes down. So I'll just leave these up there for a little bit longer, or maybe at the end of the presentation, I'll bring that back into screen. If you need me to email these to you, just don't hesitate to email leon@investorsignals.com and I'll send those through to you. Okay, so let's finish today with going into the model portfolio and just reminding you how to utilize this tool to better manage your investment portfolio. So what we do is we get the days held to the top, so the least number of days. All these columns are interactive, so you click on them and they sort in either ascending or descending order. So I've got the least number of days, so being 5 days. So Dexus Group was added to the top 100 model. I make sure that envelope's green, which means that I'm going to get emailed when a stock's added or removed from the model. So if we have a look through the recent names, these are these yield-sensitive names: Dexus, Mirvac, Vicinity, Semigroup, all within the REIT sector, and they've all been added. So high-yielding stocks, about 5.5% dividend yield, maybe some cases 6% dividend yield, but early days you really need US interest rates to back off for these names then to rally. Suncorp was added to the portfolio 26 days ago. We think that should be complemented with a covered call. Cleanaway was added. I spoke about that. If you could pick that up a little bit cheaper, it's at 179 at the moment. If you saw that around 170, I think that's good buying. Bendigo, whilst it's been added to the model portfolio, we're still a bit cautious on the banks, but mindful that Bendigo and Westpac have been added to the model. Lendlease, we think this is going to create a buying opportunity. So where you come in here and you're able to pick these names up at a discount to the entry level, somewhere between $18.50 and maybe $18, I suspect ends up being a good support level for Lendlease. AZJ, we looked at that one. Finding supported around this 415 level, probably not a catalyst to drive it higher, so add covered call to enhance the returns. Flight Centre, so this at around $51, looks like it's starting to find support. Ansell, so owning it here but selling covered calls. AGL, owning it here and selling covered calls. Woolworths, the same thing, owning it, selling covered calls. Seek's maybe got a little bit more growth upside, so you could give that the opportunity for a bit more capital growth. Newcrest, we think's a buying opportunity where it is at the moment. And then as we sort of move down the list, some of the other names that I covered down are EDI, South 32, etc. So to review these names, so if you think about the whole technology, the way it's designed is to select a list and then toggle through them. So if we wanted to go through and have a look at the charts of each of these stocks, if I click on that, it takes me in, and then rather than moving through the full 100 watch list as we did earlier, now what I'm doing is just toggling through the stocks that are in the model portfolio. So as you go through these names, all these names should have that higher high, higher low algorithm buy signal in place. So that is a way of narrowing down the type of ideas to have a think about. All right, so we'll leave it there today. Again, I'll bring into screen the notes, and if you need these emailed, don't hesitate to email leon@investorsignals.com and I'll forward these through to you. Otherwise, stay tuned, read the blog, and we'll start to identify the entry level in some of these names that we've covered today. And I look forward to speaking again next week.